But let's shift focus then to the FMCG sector. It's ahead, it's moving higher ahead of the festive season. The FMCG index itself is up close to around 18% in this year so far. The Nifty is up only around 2.5%. Mangalam joins us to tell us more on that front. Mangalam.
That's correct. So the FMCG stocks are doing well in today's trading session, and not just in today's trading session. In fact, this year itself, like you pointed out, 18% higher on the FMCG index versus the Nifty, up around just 2%. So it's the third best performing index after the auto index as well as the PSU banks itself. The FMCG index virtually is at an all-time high without most of its stocks actually being at all-time highs. And that's the interesting part out here, because the key gainers, if you just take a look at it in today's trading session as well, we have HUL, ITC, Britannia, there's Marico, Dabur, even Patanjali Foods and Akzo Nobel doing well. The reasons why they're doing well currently are more of the same. If you just take a look at the kind of noises that we're getting from everyone around us, the festive season is approaching. There is expected pickup in rural demand after the monsoons get over. Inflation fears have been put to rest for now. Margins are expanding or likely to expand in the second half once the companies are done with exhausting their high-cost inventory. And most importantly, it is a domestic-facing sector. As there is volatility in other parts of the markets, it is less affected by global economic uncertainty. So those are factors why the FMCG index and the FMCG stocks are outperforming. But just in recent past as well, if you take a look at the management commentary, that's increasingly getting positive. For instance, Marico said that volumes in the second quarter itself would be in positive terrain, and in the second half they will see volumes accelerating towards 8 to 10 odd percent. Berger Paints as well said that they're looking at strong demand in the second quarter with margin improvement in the second half of this year. And Akzo Nobel joined us here on the channel this morning itself, said that by the fourth quarter they could see margins between 15 to 17% with strong double-digit volume growth and mild green shoots seen in rural demand itself. So that's the reason why all the FMCG stocks are outperforming today and for this year so far.
Okay, all right. Thanks a lot for that, Mangalam. Just take a look at the move on